Joining me now is Northlight Asset Management Chief Investment Officer Chris Zaccarelli. Chris, good to see you. Your reaction to this expected transition. Stocks are down right now, but the president says companies and investors will transition into understanding that you have to build it in America, and that's where the job creation and the growth will come. Your thoughts?
I mean, if you look at what the president's saying, he's starting to talk a little bit like a CEO. He's saying we're not looking quarter to quarter. We're looking ahead to, what's best for the company, in this case, what's best for the country. So absolutely, the markets are trading based on the uncertainty around the tariff policy. It's not entirely clear exactly which countries and which products will be included and which will be excluded. And so really, in your interview with the president, he's trying to say he just needs more time in order to make this transition, in order to do what he thinks is right for the country. But in the short run, it will be tough for the markets. We've seen that. Markets don't like uncertainty. There's a lot of uncertainty out there in terms of trade policy, but that's something that can be worked through. To his point, if things work out and we get things more aligned the way that he'd like to, then markets will recover and we'll go back to a bull market again. But in the meantime, we are in this transition period, both within the economy as well as potentially within the market.
So what do you want to do then when you're looking at stocks versus fixed income and an average person's portfolio? Take a look at yields this morning. The yield on the 10-year right now is trading lower by 4.5 basis points, sitting at a level of 4.25%. Is this because of worries about a recession? We've got inflation data on deck this week. The February Consumer Price Index is out on Wednesday. The Producer Price Index is out on Thursday. Federal Reserve Chairman Jay Powell says the central bank is awaiting, quote, greater clarity on Trump's policies before making any moves on rates. What do you want to do then as an investor?
Given what we are seeing across the board in terms of some of this uncertainty on the stock market side, that's why it's so important to have a diversified portfolio. For all of our clients, we always have a mix of stocks and bonds, and we have a mix within stocks and bonds. So as far as from a fixed income point of view, looking at the bond market, having a barbell approach where you have some long duration assets, which will do well in this particular environment. If there are some concerns around growth slowing down, that's good for those longer duration assets that we'll have in our portfolios. On the other hand, if we do have some concerns around inflation and things do pick up in terms of the readings that we'll see later this week, then that you'll see the rates go back up. So really, you're going to want to have a balance between stocks and bonds, and then within your fixed income portfolio, you want to make sure that you have the right duration mix as well. And so we've actually been skewing a little bit shorter duration, just in case there is some bumps in the road in terms of inflation pushing those rates higher. When you look at that 10-year yield, it's taking a lot of different things into account. It's looking at potential growth or slowdown. It's also looking at inflation expectations or those coming back down. And then the last thing is just, the uncertainty of just longer duration in terms of the term premium. So, the bond market has started to come back down in terms of yields price higher. So for those portfolios for those clients that have a diversified portfolio, the bonds have been providing a little bit of ballast, despite the fact that the stock market's been going lower so far this year.
Thank you, Chris Zaccarelli. Good to see you. We'll be right back.